Is this thing on or how's it going? Well, hello and how's it going? Well, how's it going?
Hello, and how's it going? Hello, how's it going?
Well, how's it going? Well, how's it going?
Well, no, sorry. Well, how's it going?
Well, how's it going? I'm here with you. I looked at you and I started
I was
laughing.
going to say good.
Well, how's it going? I'm here with Christian and Madison, and we're back.
We are back.
The back, baby. My phone vibrated.
Try not to laugh.
Well, how's it going? I'm Ben Spaterio. I'm here with my co-host Christian Karamatic.
Why are you rushing through that so much?
Why are you laughing?
Oh, because of you.
I made a joke that Christian looks a bit yellow. He bit gorgeous. Is it gorgeous? Gorgeous?
No.
Isn't that when the babies are really yellow? I should know that.
What is happening? It feels like
Gorgeous. That's it. I was right.
This whole recording session feels like a fever dream.
You look a little bit gorgeous. Like you look like you're lacking something.
I'm lacking a lot, but you have to be more specific, man.
I'm not going to go into that.
Yeah, it's not. It's not.
We're
too
not
bad.
on an AA meeting. We're
Not a
on the
podcast
How's It Going
episode.
podcast.
Yeah,
And this is our final recording without the one and only Madison.
it's such a good thing that she's coming back.
It is a
isn't
very
it?
good thing.
I feel like the longer she's been gone, the more unhinged we've been getting, and it's starting to border on dangerous.
It's better for the viewers as well. They're sick of looking at these two pretty
Yeah.
average looking blokes.
Oh,
One's
yeah.
married and one's very far off that. What are we here to talk about today, Christian? Actually, before we get going, Christian's got a new tattoo.
That's what you're going to forget again.
No, I wasn't going to forget this time. He spent 9 hours in the chair.
At least you remember
Take that as you
detail.
will. Please show us.
Do I have
Show us what you're rocking.
Do I have to?
You have to. Strip.
Okay. Well, I don't know about strip. It's just on my arm. But yeah.
Wow.
I don't know how visible that is on the camera, but
We're going to zoom in.
I hate this. No, I'm editing. I'm going to cut this whole bit
No,
out.
we're zooming in on that. Go. What is it? Give us a breakdown.
We're not doing this, man.
What do you mean?
It's pretty self-explanatory, really. It's a knight, and it's on the shield is a Croatian coat of arms, and it's
Yep.
a cross.
Is he a certain knight, like the knight of
Not
St.
particularly.
George, or no?
Not particularly, no.
Oh, it's very nice. I like the color. The Croatian flag or check is a
Tablecloth.
tablecloth. Oh, are you allowed to say that?
I'm Croatian, so I'm allowed to say
Okay.
it.
Well, I didn't say that. Was that your second tattoo, or have you got any that we can't see on camera?
You know how many I have. What do you mean? They're all on camera. They're all visible.
Oh, okay.
We've been to
Third, fourth.
fourth.
Fourth. Where's the fifth one?
Not Whit Madison, please come home.
Oh,
Maddie.
we're 2 minutes in and we haven't even touched on what we're talking about. Christian, kick us off.
Yeah,
What are we here to
Should we
speak
do the
about?
marketing plug now or at the end? What do you like? What do you prefer?
I hate it either way. I don't ever want to do it again.
But we have to.
We don't have to.
We're not going to plug our own product.
At the end.
Okay, all right, I'll do it at the end. The topic of today's episode it's going to be construction loans.
Construction loan.
Construction loans,
Who needs
specifically
construction loan?
anybody that wants to build a house, Benjamin,
Interesting.
unless you're building it in cash, which most people these days probably aren't.
No. Not. Oh, no, I'm not. That's a bit off. Unhinged, that joke. I'll leave that one.
I said it before, I'll say it again. Maddie, please come home.
Yeah.
No, well, construction loans are a funny thing, and obviously I deal with them quite a bit. And it's one of those things that I think until you've done it, most people don't have a good idea of how they actually work and what the requirements around them are. And there are a lot. Like construction loans, to sum it up for you very briefly, banks don't like them. They consider
Resident in
them
particular, or
they consider them high risk, and it's something banks don't like anything that they don't have control over. And unfortunately, construction is one of those things that they have very limited control over. They're basically paying money to a builder who they don't know from a bar of soap. And if something goes wrong and the builder, let's say the builder goes bankrupt halfway through the build, the bank is left with a half completed property as collateral for their lending, which is not good.
heard that happen before.
Yeah, it does happen. And this is the thing. So they consider them maybe not necessarily high risk, so to speak, but they don't like them because they lack control. And construction loans are one of those things, but they're also a necessary evil. And this is another thing that gets under my skin, where I regularly on this show talk about our housing affordability crisis, and it bubbles down to a lack of housing supply.
Don't bring the Greens into this.
I wasn't going to. You are unhinged today. But yeah, and then obviously banks make it harder and make you jump through hoops to get a construction loan. So it's like, well, the issue is housing supply. Let's make it harder to build new houses.
That's frustrating.
Yeah, a little bit. And it depends. Look, it depends. Normal construction loans, as long as they're by the book, are generally pretty easy. They're not too bad.
Yeah.
Anything that's slightly outside the normal sort of square in terms of construction loans, they a lot of the time just won't do it.
Really?
So one of the biggest things I get asked about often is owner builder.
Yeah, good old Joe Blow. He's going to whack up the slab and the form himself. And
Yeah, mate, he's going to head down the site with a box of VB and a carton of Marlboro Golds, and he's going to throw up a house.
that sounds like a good Friday afternoon.
It's the Australian dream, man.
It is. I feel like not everyone. I feel like a lot of people in their like 60s, 70s. Yeah, I built that house. That was our family house. I laid
Correct.
those bricks.
Correct. And look, owner builder loans, owner builder construction loans. They're basically, honestly, there's a point they don't really exist. Most
Wow.
banks don't do them at all. Period. There is a small handful of lenders who will do them, but under very, very strict conditions. So, for example, the Westpac Group, so Westpac, St. George, and whatever other subsidiaries they own, there's a lot of them now. They still do them, but again, under very strict caveats. So, for example, normal construction loans, you can go up to 90% loan to value ratio with LMI. Owner builder ones under Westpac, I believe they cap you out at like 60 or 70%.
Okay.
You also have to have qualification needed to actually do the build. You can't just be a random Joe Blow. I think you actually have to have a building license from memory. And funny enough, you have to have also undertaken a residential, like you have to have done an owner builder build before. So if you haven't, say, I can't do it. No.
So it would have been someone that got it through previously before they really tightened the restrictions, and now
Yeah. So out of the majors, they just don't do them. Westpac are the only ones that I'm aware of out of the majors who still do, I guess, proper traditional owner builder, but under very, very strict criteria.
So if you were desperate and you hadn't done one previously, you're looking at third-party lending.
Yeah,
as a
like private lending potentially.
Yeah. Wow.
And even then, like even some of the smaller non-bank lenders, a lot of them don't do owner builders. It's not worth the banks basically determine it's too risky. It's not worth their time.
Not that I think it affects a large portion of the market, but I
You'd be
can't imagine a
surprised.
builder would want to let another builder build their home.
Correct. Naturally.
Hmm.
And well, this is the thing. I had someone ask me not long ago, a couple of weeks ago, like, oh, well, they also, if you're doing it normally, like a normal construction loan with a third party builder and a full building contract, it's also got to be at arm's length. So I had a young guy say, oh, well, I want to build my own house. Or like me and my dad want to do it together, like father-son project, he'll help me build it. And his dad runs a building company. So his dad's company could draw up the contract. And I said to him, you can't. The banks will basically classify that as effectively owner builder or close to it. It's not an at arm's length transaction. So they're pretty, they don't like it. They don't like construction loans, banks. But again, like I said, they're also a necessary evil. Not even evil. It's a really bad choice of wording. They're necessary.
Yeah.
You need them. If you want to increase housing stock in this country, then
Well, you
people
think
need to
about
be
how
able to
many
fund it.
younger people as well. I know they're not all owner builders, but like going to a less expensive suburb, moving further away, for example, Wollongong, moving down south, you're building a new home.
Correct.
You're not generally buying something because there aren't existing properties down there. So.
Correct. And look, if you're doing it normally through a normal registered building company, building contracts, everything like that, generally it's not a problem.
Yeah.
But there are obviously other things that come into play, which a lot of people don't realize about building loans, construction loans. So, for example, a lot of developers now, they promise like off the plan, the house and land packages.
Yep.
The reality is, in finance land, a house and land package, like a house and land loan, it doesn't exist. It is always broken down into two portions. When you do a construction project, you have the initial land loan.
Yep.
So again, assuming you're not funding any of it in cash, but if you need finance to purchase the land and then the build, even if the developer is marketing it as a house and land package, it very, very rarely actually is. In reality, it ends up being you've got to split it up into two sort of separate loans. So you have the initial land loan, and then you have a separate construction loan.
How does that affect you as a first home buyer, for example, with stamp duty?
It's based on the land. So the stamp duty waivers are based on the land, correct?
So you're going to pay stamp duty on the construction, or you don't?
No, there isn't, because the stamp duty is just on transfer of land.
So instead of I'm looking at a house and land package for $1 million, I'm going to save on stamp duty to X. You're only really paying it on $500,000, let's say, which is the land.
Yeah, it's based on the land. The stamp duty component is based on the land value, but there are other first home buyer benefits. So, for example, the grant, the first home buyer's grant, the $10,000, that's based on the completed value of the property.
Okay.
So it's got to be split up between land and construction, and generally the same rules apply as a normal purchase. So in terms of your OVRs, to avoid LMI, got to be capped at 80%.
Okay.
So at the land stage, that part works the exact same as a normal purchase. If you buy the land for $400,000, you need to have an $80,000 deposit. Your loan is $320,000, 80%.
Yeah. And that's hard because it's really, a lot of people look at it, you're paying as two separate transactions. You've used your deposit on the land.
Well, the way you basically look at it is it's two separate transactions, but you still look at it the whole thing as one combined. So when I talk people through their scenarios with construction loans, even though they're separate, you look at the whole thing as a combined.
Yep.
So you say you need $80,000 at the land stage, and you might need, if the build's going to cost you $400,000. Same thing. The way the banks assess, the other thing that obviously I think is really important to cover off is how the bank calculates your final loan to value ratio. Because I mean, look, obviously you don't work in my field, so I'd be pretty surprised. Well, you did it, so maybe you do remember. Do you remember how they calculated your loan to value ratio at that construction portion?
Mine was a little, only because we purchased the land and then it was about 2 years later that we did the construction. So we didn't fork out anything extra. We used the equity from the land then for the construction component, but I don't remember.
Well, even then they would have still had to, the land itself wouldn't have had enough equity in it for you to fund to provide collateral for the whole build loan either. But the way they do it, they do what's called a tentative on completion valuation, a TOC valuation, where they basically will get a valuer out there. You have to provide the valuer with the full signed and dated building contracts, your full council approved plans, the specs, the tender, everything.
Yep.
The valuer goes over it and they basically will slap an end value, a completion value. But the thing is, remember what I've said to you on previous episodes, when you buy a property, even though the banks do a valuation, they always take the lower of the contract price or the valuation. So if you buy an off the plan unit and if you buy it for 700, but 2 years later when it's finally completed, you get a valuation of 800, the banks will still generally
take the 700.
Correct.
For
their LVR calculations. And the same thing applies for building loans. So what they'll do when they do the TOs at the land stage, it's simple. They take the lower of the contract price or the valuation, same as a purchase. At the construction stage, though, when they do this TOC evaluation, they split it up so that the valuer will put the value of the land and then the value of the improvements, and to arrive at an end value effectively. And what they do, the bank will take the lower of that total end valuation from the valuer, or the land value provided by the valuer and the building contract amount. Instead of a contract of sale, it's the building contract that they base it off for their valuations, their LVR.
So if your land was worth $500,000, your construction contract was $500,000 as well,
then your LVR calculation is based on $1 million,
which is going to be 80%.
Well, you would need to avoid LMI, you would have to keep it to 80% of that $1 million. Correct. Yep. That's the first thing that a lot of people don't realize, because it's they base it very heavily on the building contract itself. And they do that TOC evaluation, and that's kind of what they base all of their numbers and calculations on.
Okay.
So like I said, it's still split up into two stages though. So generally you got to do the land loan first, get that settled. And then once that's settled, then you can progress to the full construction loan. And a lot of the time people do them conjointly. So like if you're buying land, generally most people, if you're buying vacant land, you want to build pretty much straight away.
Sure.
So generally what I do for most people is you do the full approval for the land. And at the same time you're requesting full approval on the land, you also submit for a pre-approval, because you can still do pre-approvals on construction as well. So even if you don't have the building contract finalized yet, which obviously if you just bought the land, you wouldn't, you can say to the bank, we're estimating a building contract price of $400,000, and they'll give you like a pre-approval based on that.
And so they can walk into those appointments and know what they can actually spend, because they're full on. Those construction appointments.
You've done it.
Crazy. And there's no prices on any. Like you're going through, it's like a big Woolies or something, and you're walking through and you're making every selection from paint color, flooring color, apps.
And you've got no idea how much it's costing.
No, exactly right. You don't know what it's costing. You get there to the end of it and it's like, ding, 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 ding. Oh, there's $480,000. And you're like, whoa.
Who did you and Tegan do yours through?
The loan or the build?
The build.
Burbank. Yeah. Yep. Can't say a bad word about them.
Yeah.
Had other friends that have used other local companies, and not to shade anyone, but they weren't too impressed and stuff like that. So I think we got pretty lucky and we didn't have any issues.
Yeah. Handover
was fine.
I usually find from my customers, it's usually pretty 50-50 in terms of the feedback with these developers. And I found even the bigger, like your Mastertons and GJ Garden or whatever they are, like the big, well-known branded ones.
Yeah.
Even them, it's very 50-50. Some people have a great experience. Other people go, that was shit.
I think, unfortunately, that's just the building standard in the country. Like,
it is.
Yeah. I think for people that are very demanding, I think they're probably not going to be happy with that.
Yeah.
Because they are stock homes, really. Like, and that's why they cost what they cost, because they can the plans are generally 99% the same, because they charge you an arm and leg to make any change.
Cookie cutter.
Yeah, and so they can just slap them up and put them there. But if you have high expectations, you're probably going to be
and you want a
slightly-
bit more of a personalized product, then it's a bit
Exactly right. I
different.
think we were pretty lucky that we were first home buyers, had no expectation, and we just got a brand new home, so we were stoked. It did like
Just want a house near a Woolies.
exactly.
Couldn't even make that happen. Poor Tegan.
You got me there.
Yeah, that's obviously when you just to link it back to sort of construction loans, because I've completely lost my train of thought there. Went on a bit of a tangent, but yeah, ultimately the building contract dictates everything,
Okay.
and you can still do a pre-approval so that when you are sitting in those appointments, that's where I was getting at with it. There we go. I brought it back. You can obviously go into it knowing how much you have to play with.
Okay.
Um,
Would you say large percentage of your client base, without going into too much depth? What do you?
well, you know the irony of it. Generally speaking, when you apply for a lead loan in the chair,
Sorry, the chair's going on me there. I'll readjust.
Can you hear it in the recording, Dom?
Sorry, Dom.
Oh, Dom's going to kill us. Don't nod. You're supposed to say no. No, you're not going to kill us. Okay. He said it's fine. We're good. You good, Ben?
I'm good.
All right, good. What was I saying?
We were talking about a percentage of your customers that are doing construction loans.
Yes. That's a hard number to quantify. What I was going to get at more so was I thought you were going to ask about how many of them do pre-approvals for construction loans before they actually go in and sign. And the reality is a lot of the time when you apply for the full approval on the land loan, you can't just apply for a vacant land loan and leave it at that. You need to be able to tell the bank what you plan to do with it. If you tell them we're just going to sit on it and hold it and sell it in 3 years for growth, a lot of the time they won't let you do it.
Mm.
They need to know that you have a plan in place to be able to build a property on there because they don't like holding vacant land as just empty collateral.
Equitable for 'em. Yeah.
So a lot of the time when you apply for that land loan, you need to tell the bank either we've got our own funds to cover the build or you generally just apply for a pre-approval. And I always say to people, look, even if you do the pre-approval for the construction at 350 and it winds up blowing out, as long as we know we have the borrowing capacity, it doesn't matter.
Yeah.
Because at that stage, the only thing the bank is really assessing on the pre-approval is just the borrowing capacity. Like there's nothing else for them to assess aside from the arbitrary number that you give them.
Yeah.
So yeah, it's a twofold. Like you got to do the land loan first, and then once that's settled, then you obviously go full steam ahead with the construction. So generally speaking, you need to obviously do the TOC evaluation that I mentioned, and you can't do that without plans and specs and things like that. Sometimes you can get away with the valuation without the council approved plans. And some banks, you can even submit for a full approval on the loan without having full council approved plans.
Okay.
The thing is, I always say to people, there's a risk in doing that because if we get it fully approved and you sign your loan contracts and everything like that, not so much that you're locked in, but then if council come back and say, we're not happy, you've got to change the plans, it has to go back and get reassessed anyway. I usually say to people, you're better off just waiting till you actually have the council approved plans and then we'll go for the full approval.
Yeah. As I punch the table there, sorry.
Bro, Tom's going to kill you today. So generally, because what happens then is once you get the construction loan fully approved, so let's say you've got your council approved plans, you do your TSC evaluation, you've got the specs, the tender, everything like that, the signed contract, the bank goes through, they reassess it all, they fully approve it. The application process is effectively the same as a normal purchase loan. They assess the borrowing capacity, they assess the building contracts like they would a contract of sale, everything else. They issue the full approval and then they issue you with loan contracts. Everything up to that point is the same. And what happens is they actually still have they call it a settlement. So once you've signed all your loan contracts and you've got all the extra documents you need back to them, they effectively settle the loan, which means they treat it as settled in their system.
Yep.
And they pass it from their normal settlements team over to their construction team. So most of the banks actually have like an internal dedicated construction loans team. And what happens is once it's sort of internally, settled, it gets passed down to their construction loan team.
Yep.
And then that's where they also go and review and say, we need XYZ documents. So if you didn't have the council approved plans, you could go all the way to that construction loan team. And then you hit the roadblock and they say, they will not make the first payment, the first drawdown until you give them all the council approved finalized plans and everything like that. And that's what I'm saying. It'd be a pain in the ass to get the full approval, go through that whole process, and then have to get it sent back up for reassessment because council said no.
The drawdown part was quite interesting. When I was doing it, I thought that was...
Yeah, so that's another thing people don't realize with construction loans. Yeah, the bank doesn't just pay out the lump sum of money to the builder and say, go for your life. They call it progress payments or progress drawdowns.
And they don't trust you with it as well.
No, you don't see that much. There are some cases where you can. Like sometimes for example, if you've paid, let's say you had extra money and you paid the builder in advance, you could then get the bank to reimburse you.
Yeah.
You could do it that way. Don't know why you would, no point. But sometimes just for the sake of getting things moving quicker, people do that. But generally the way they do it, so you get all the paperwork back to the bank, including the finalized council approved plans, the specs, the tenders, the building contract, everything. The construction loan guys go, yep, we're happy with this. And they start drawdowns from there.
Mhm.
So effectively what they do is the building contract will actually be broken down into stages. Usually I think there's 5 or 6 stages, I think it is. And the bank will pay the money for the loan in terms of according to the building contract per each stage. So the builder has to do X amount of work, get it to that stage, and basically then put in a request for more money to progress it to the next stage. The bank will also do an inspection at the first drawdown and at the last drawdown to make sure that it's all been done accordingly. The other thing that goes hand in hand with that is also, obviously, we spoke about before, you still have to put a deposit down generally for construction loans.
Yep.
Remember I said it's still at 80% OVR. So let's say your building contract was 400,000 and you end up borrowing 320. So you've got to put in 80. The other thing that people don't realize is the bank will not start making payments until you've paid your deposits. You got to pay your money first and then the bank takes over.
So if you get an invoice for 50 grand, they're not going to give you the 50
Mm-mm.
out of your
So
pocket.
if the first stage of the build is 50 grand and the second stage is 80,
Yep.
that's 130 grand over the 2 stages, but you're only putting in 80. So you've got to pay the 50,000 for stage 1, cover all of that. Well, then when it progresses to the next stage, you get the invoice from the builder. You basically have to pay the builder 30,000. That's your remaining contribution that you told the bank. And then the bank will pay the rest of that stage at that point. And at each stage that you want to draw down, depends on the bank. Some banks have an actual dedicated form. So you have to fill out the form every single time you want to make an additional drawdown.
I think I had to do that. It was an absolute pain in the ass.
You got to fill out a form and you got to get a signed and dated invoice from the builder.
Yeah. And the builder is hounding you for the money because
They do. Some builders
want
have
the
it
money.
built in their contracts is when they invoice you, they have to get money in their account within a week. And a lot of the time they don't enforce it because they know obviously banks are difficult to deal with
Yeah.
on a good day.
and a builder knows they've got you up against the wall because everyone, when they start construction, they don't want to just sit there and be looking at an empty site as well.
Correct. So it gets pretty full on. Like it's not, that's what I said in terms of construction loans. From a lending point of view, it does follow most of the same sort of basic principles as normal purchases or whatever you're doing.
Yeah.
But obviously where it differs is more so how the money's paid. The other important thing with construction loans is their interest only during the construction period.
Oh, okay. I didn't know that.
Correct. It's basically to effectively you're minimizing the cash outlay during that construction period. And then once it's built, it converts back to P&I, principal and interest. And you also obviously, so because it's progressive drawdowns, you only pay interest on the funds that have been paid by the bank. So as the construction loan, as it progresses and as you're drawing more money from the bank, the repayments get more and more. And then at the end of it, they convert the construction loan back to principal and interest, but you still have a separate land loan. You have 2 loans.
They don't conjoin.
Most banks don't automatically consolidate them, no. You have to do it yourself manually or through your broker. So at that point, when people say to me, like, we want to,
Oh, that's good. Sorry about that.
what was that alarm for?
To pick up my sister from work.
Oh,
We're
That's
still
fine.
within time. No, we're good.
Okay. How long? Hopefully your sister's not standing on the
No, we're
standing out
good.
the front of work waiting for you.
We're all good.
Yeah, so you have to manually consolidate the 2 loans back into one.
Okay.
And again, so again, a lot of time I do that. So I'll do the initial legwork and do 2 full loan applications, and then I've got to do an extra third one just to consolidate them at the end. It's a full application. It's considered internal refinance.
Oh, no, you have to do your job
Oh no, I
for
have
your
to
clients. You poor thing.
mate. I do it with a smile on my face, Benjamin.
Oh, I'm glad you do.
Mate, it's got to be done.
He does. He definitely does.
I try.
So, but there's no benefit to you to having 2 separate loans there for it. Are they generally, they're going to be at the same rate anyway? 'Cause yeah.
There's no, well, technically no. You get a different rate based on, because the most banks have a separate product type for construction loans.
Okay.
So the land loan goes under usually it's just a normal standard, whatever standard loan.
But the construction may
It's
be
a
sitting
separate
there at a
product.
higher one. Okay.
And then
so
usually-
it does benefit you to consolidate them
Yeah.
immediately.
At the very least, you maybe not consolidate them. Once it's done and it's built and it goes back to principal and interest, you can just get it repriced back to a normal
Are you
interest
going
rate
through
again.
like the refinance process then? Like you'd
Just to get a
rate,
repricing, no. But to convert them, yeah, it's a full internal refinance to
Okay.
consolidate them back into
which
one
probably
loan.
isn't a bad thing for most people because you're going to get, you'd hope your values increase from your contract price or your
Correct.
construction price as well.
Correct. Because at that point when it's built, you can get it revalued.
Yeah.
And with the construction process, they're basing it on the contract price.
Yep.
But usually when you do a build, there's a big value add. So usually the end value ends up being higher than what the contract and land value is.
Definitely.
And if that's the case, if it brings down your loan to value ratio, you generally will get a better interest rate out of it.
It's good.
So yeah, it's just a lot of extra work. Like I said, the banks make you jump through a lot of extra hoops for construction loans.
I do remember ours was not very cut and dry.
No.
That may have been the bank that we were with, and since changing over to Lover Finance, everything was a breeze. But
I haven't done a
yeah,
construction
no, the
loan.
construction
for you
loan.
yet, though, that's
No,
why.
you have. That's what I mean. But the construction loan was very full on.
Yeah,
It
they're a
was-
pain in the ass, for lack of a better phrasing.
Yeah, and I
Um,
remember going through the processes of when we get the invoice from the builder, it was like, get this paid now.
Yeah, the builders
Uh,
tend to hound you.
Yeah,
Yes,
which
doesn't
I
help.
sort of get, but at the same time, it's like I can only move as fast as the bank's going to let me, and generally
Correct.
the banks are moving quite slow.
They work on bank time.
Yeah.
Yeah. But yeah, that's pretty much it. I'm trying to think if there's anything else I really needed. That's the main points with construction loans.
Yeah.
So like I said, there's a whole. Generally, when I'm talking about, I should probably clarify what I'm talking about too. When I'm talking about building contracts, the general standard accepted kind of type of contract, it's called a fixed price building contract.
Yep.
And generally, it's payment in arrears. So the builder completes the stage and then they get paid by the bank. So a lot of the time, the builder has an initial kind of cash outlay and then the bank reimburses them effectively. There are other types of building contracts. So there's ones that are like floating. So like they're variable. They can change based on construction costs and materials and things like that. Banks don't like them. A lot of time they won't do them.
No, that's scary.
Even things like payment in advance. Banks don't like payment in advance.
From
They
a
don't.
consumer's perspective. Oh, payment in
is.
advance. Yeah, no worries. Just pay me $5,000. I'll be back next week to do the job.
Well, banks don't like them for that exact reason. Imagine giving a builder 80 grand and saying, now you promise you're going to put up those frames, right? I promise. And that bank doesn't know. The builder could go bankrupt the next day and run off with that 80
Exactly
grand.
right. Like you've heard of that happening in the last few years. Like,
Oh, yeah.
how many people have just been left with a slab, or that's it, or
Mhm.
they're halfway through construction and the builder's gone bust, and
Yep.
who's there to save them?
No one.
Not Lover Finance.
I can't help with that. I can help with a lot, but not that.
You're up shit creek if
Pretty
that
much.
happens.
Up the creek without a paddle. So yeah, it's not exactly, like I said, there's different kinds of building contracts, there's different payment arrangements and things like that. But the market's generally lean now towards just a general standard accepted fixed price building contract payment in arrears.
Would you say they've gotten any easier or harder, or is it still just sort of the same amount?
The last few years, there hasn't really been much shift. It's been pretty standard.
Okay.
The other thing I should mention too, remember I said the banks will do an inspection at the start and at the end?
Yep.
The inspection at the end, so before they make the final payment to the builder, you have to get occupancy certificate. The bank won't make the final payment unless the property is fully completed with an occupancy certificate.
And that can generally draw out as well because that's going through council.
Mhm. Sometimes you can go through private certifiers, whatever, but it's not always cut and dry. And a lot of the time, there are also other cases where, just to add extra complication to it, I don't know what it was like with your build, but a lot of the time there are things that you have to do at the end of the build that are not included in the building
Yes.
contract.
I had
Usually the most common
to-
one is landscaping.
landscaping. That was exactly mine.
Sometimes I've even had people say, yeah, we're going to do the driveway ourselves. My cousin's a concreter, so we're not including it in the building contract.
Yep.
Situations like that, that'll be flagged on the valuation that the bank does, the tentative on completion one. So if there are items that are not covered in the building contract, you've got to also prove to the bank that you have the funds to cover those.
I don't know how I got away with that. I didn't have a driveway and I didn't have landscaping. We had to. I remember having to include a landscaping plan, but there
Mhm.
was no cost associated with it. But we didn't do a driveway, and I couldn't afford to do it. we didn't have a driveway for a year.
I don't know how you got away with that either. To be
Just
honest with
driving
you.
on pebbles.
That sounds perfectly
Yeah,
safe.
well, when you're broke, you're broke.
Calder would
But
be.
you had a brand new home, so
Yeah. And yeah, obviously, usually it's pretty standard. Usually it's things like the landscaping, which it doesn't affect occupancy certificate. You can get the occupancy certificate without completing your landscaping. It's not a big deal. But sometimes I've done loans where there are other items that are vital to getting an occupancy certificate that are not included in the building contract.
people think that they're saving themselves a lot of money. I generally, from experience, you don't generally save yourself that much.
Not as much as people think.
No, and then also it's coming out of your pocket.
Correct.
Whereas if you include it on your contract, it's going on the loan.
Correct. It's more if you have certain items that are, again, if you have an item that is, it has to be taken into account for the occupancy certificate.
Right there.
No, I think I just had a mental
Flashback
snap.
to midnight last night.
I just flashback to construction loans that have gone awry.
All right, okay.
No, if you've got an item that's not included on the building contract, I'll get through it this time, I
Yeah,
promise.
good.
But it's relevant to getting your final occupancy certificate. Sometimes you end up at an impasse because the builder will say, we want our final payment. And the bank will say, we're not giving you the final payment until you get occupancy. But the builder goes, not my problem. Our contract does not take it to occupancy. There's other items we're not covering. So you end up at this. I've had that happen before where they've gone, well, the bank doesn't want to pay the money until we get occupancy. but we can't get occupancy, but the builder's done with their part. How do you do it?
Very messy.
Yeah, very messy. And there are ways and means you can do it. You do what you got to do. You get it sorted, but it's not pleasant to deal
No.
with. So there's a lot. Yeah, building construction loans are a lot more complicated than people think.
Mm.
And items, like I said, at the end especially, final payment does not happen until you get occupancy. Sometimes you can get away with like a partial.
Yep.
They used to do interim occupancies, but a couple of years ago they scrapped those. Now they're partial occupancy certificates. I don't know the details of how those work.
I don't know the ins and outs as well.
It's like, oh, this room's occupancy certified. This room, the back room is not. Like, how does it's partial? Like, what is that? I'm trying to think if there's anything else that's really relevant to add. Those are probably all the main points.
I think you've done a pretty good job of covering it, considering you're coming off a bender.
It wasn't a bender. It was one night. It doesn't count as a bender.
Sorry.
Come on, Ben.
Sorry.
Wording is important.
Oh,
Terminology is important. You got to be specific.
Exactly. Sorry. One big night.
Remember I said to you, if you're going to come for me, you got to make sure you're accurate.
Oh, God. All right. On that note.
All right, guys. We are jumping back in. We had a technical difficulty. Our camera died. We did buy some extra equipment to stop this from happening because previously the camera was overheating. And that wasn't the issue that we had this time. We just forgot to plug it in, so the battery died. That one, Dom's putting his hand up as he should. But no, I think we were pretty much done. I didn't have anything else that I wanted to add to construction loans, unless Benny had any further questions.
No, I think you went over it really well.
Yeah,
and I think if anyone's got any questions about it, or they're looking to get a construction loan, to reach out to Loba Finance.
Yeah, let us know. We'll talk you through it in a bit more detail. We'll do some numbers and info specifically catered towards your circumstance. We'll get you through it. As painful as it is, we'll get you through it.
You nailed that. Well done.
Thank you very much. I do need to plug the podcast. Ben was hoping I would forget. I'm not going to forget.
Viewers.
So we are live on 3 platforms, Spotify and YouTube. We have full video podcasts. Apple Podcasts, it's just the audio as far as I'm aware. If somebody ever asks you, do you know a good construction company or a good property developer? You say, I don't, but there's a really bang average podcast you can check out. Instead, that tells you all about it.
Every time.
How's it going? That's it from me. Benny, would you like to wrap us up?
Yep. Over and out. We'll be back next week or in 3 weeks or 2 weeks. I've lost my train of thought there. Next time we're back, we'll be with Madison.
Correct.
On that note, ciao.
Ciao.
Everything presented in this podcast is for information and entertainment purposes only, and all advice is to be considered general in nature. It does not take into account your personal circumstances and financial objectives. Please consider if this advice is right for you and look to consult a financial professional.